Hey guys, Czar here. Hope all is well and trust you're having a good week. I just wanted to take a few minutes and talk a little bit about mastering trend continuation trades. I've been getting a lot of questions about this particular setup lately, and for good reason, and so I thought it would be a good time to put together some slides and walk you through exactly how trend continuation trades work, at least in my world. And before we get right into some examples, I want to remind you that the Razor's Edge day trading model really encompasses three primary setups. And very simply, they are zone break trades, zone reversal trades, and trend continuation trades. And of course, today's session is all about trend continuation trades. The trend continuation trade really has a few key characteristics that are important to understand first, and they are these. First of all, as the name would suggest, the trend continuation setup occurs during an existing trend on any time frame, and I'll show you some practical examples of that so you'll know what I mean by any time frame. The entries on TCON trades or trend continuation trades are often after a pullback or a retracement in that existing trend. The setups may contain elements of zone breaks and zone reversals, and you will see some familiar things there. You may even say, well, isn't this a zone break or a zone reversal? I'll show you some of these and explain why I've categorized the particular trade as a trend continuation or TCON trade instead of a zone break or a zone reversal. I think it will make sense. Another key characteristic is that the setups for TCON trades are typically more advanced than zone breaks and zone reversals. And what I mean by that is a trend continuation trade really often requires more discretion and artistry than a zone break or a zone reversal. Whereas the guidelines or the rules, if you will, for zone breaks and zone reversals are more mechanical in nature, less so with trend continuation trades. And for that reason, the TCON setups are best suited for experienced price action traders or those who have had thousands of hours of chart time and really understand the biology of candlesticks and the inner workings of price action and technical analysis and price patterns and momentum and things of that nature. And for that reason, I do recommend that if you're following the Razor's Edge day trading method or looking to learn more about it, that you master zone breaks and zone reversals first and then move on to trend continuation trades. In my experience, it just seems to work better that way if you're really trying to get up to speed on the Razor's Edge model. I will also remind you that the Razor's Edge day trading model really uses two screens or two monitors. You can do it on one monitor with two tabs. You don't need multiple monitors for this. And those two screens are my main trading grid, and I'll show you an example, and then the Three Sisters grid, which I'll show you as well. My primary trading grid is very simple, and this is what it looks like. It has a daily chart up in the top left, a 30-minute chart in the bottom left, and a 1, 2, or 3-minute chart on the right-hand side to really dig down into the micro price action, if you will. The second grid is the Three Sisters grid, and it looks like this. Three charts side by side, the NASDAQ, the S&P, and the Dow from left to right. This is a 1-minute version of the Three Sisters. On the 1-minute version, I also have the VWAP or volume weighted average price. It's this blue line going through the middle, and then 2.5 standard deviations on the top and the bottom of that VWAP or volume weighted average price. You will also notice the 21 and the 9 EMAs on each of these charts. I also use a daily Three Sisters grid and a 30-minute Three Sisters grid. I don't include the VWAP on those two versions, but you get the idea. All right, trend continuation trades. There are a few other considerations that I would encourage you to incorporate into your thinking when dealing with anything in the world of trading, but certainly with trend continuation trades. The first is time of day, and this is a critical thing, and I talk about it a lot on my Telegram channel and in my YouTube videos, to be very cognizant of when you're trading these trend continuation trades, or any of my setups for that matter. I think it's important to understand what's happening near the open of the day, and then what happens during the twilight zone, that downtime during lunchtime, and then coming out of the twilight zone where volume often picks up. And of course, in the last hour or last half hour of the day, power hour and beyond is a very important time as well. Secondly, as news releases, be absolutely cognizant of when these news releases are coming out or have come out and what prices are doing as a result of those releases. As most of you know, I don't have open trades or orders going into key news releases, but I will sometimes enter trades after the dust has settled from those releases. Another consideration, of course, as I mentioned, is the three sisters, the NASDAQ, S&P, and Dow, and how those three indices are relating to each other throughout the entire trading session. I never stop looking at the three sisters before and during my trades. What we're looking for here, of course, is synchronicity, divergence, asymmetry, proportion, relative strength, relative weakness, all of these things. And there are many ways to approach this. Things like closing gaps, buying the strongest, selling the weakest, buying the weakest to close a gap with the strongest, and so on and so forth. And I've done videos on this topic in some depth. Another important consideration is the current volatility profile of the market, or VIX, the implied volatility. And I've done individual videos on the importance of VIX and volatility. As many of you know, when VIX is below 20, day traders typically struggle to make money. VIX above 20, it becomes easier for most day trading models, not all. And so considering the current level and velocity of VIX is important, especially when dealing with trend continuation trades. I think you'll see why as we go through some examples here. Ultimately, guys, it means remembering that trading is a dance. It means understanding the music of that dance, the tempo, the rhythm, the timing, the footwork, and then deciding if you want to even join the dance or not. And that decision is always yours. The ability to sit out or to join the dance, and remembering that if you choose to join the dance, allowing the market to be the leader in that dance. All right, trend continuation trades. Let's get to some examples, and I have lots of them. I think I have over 50 examples to show you. Why would I show you so many examples? Well, I think with something like this, especially with trend continuation setups, repetition is the mother of skill. And it's going to take seeing a lot of examples to begin to understand the mindset behind trend continuation. So why don't we get started right now? First example, this is the NASDAQ. You will notice the daily up in the top left-hand side, if you remember, is a bearish daily in this case. This is the New York start right here. You'll notice that prices drove all the way down in New York, eventually formed a bottom, pulled back or retraced right back to a 618 Fibonacci. So impulse down, retracement or correction up to a 618, and it began to break down. You will see if we move over to the 1-minute chart, this nice pullback, that's part of this leg right here, and then a breakdown below 2 EMAs, drop, a little bit of a pause, breakdown for that continuing impulse move down. Entry, 2R win, nice and clean. Next example, again, NASDAQ, bearish daily, having broken the prior day's low. This is Europe coming into New York session, drive down, pull back, retracement, and then continuing down. So impulse down, corrective up, trend continuation down, following the bearish momentum of the daily. You can't see the pullback here. We can see part of it here, of course, then dropping down below 2 EMAs, negative moving average configuration, taking the entry here, and then 2R winner from there. Again, nice and clean. So it's trend continuation, right? Bearish daily, pullback, bearish daily, bearish 30-minute, pullback, continuing bearish into lower lows. Next example, S&P, right? Bearish daily, broke the prior day's low, coming out of the twilight zone. That's after lunch. Seeing the momentum continue, there was actually a zone break opportunity here. I didn't take it, but when I saw the speed of the drop and then this nice pullback, this is a 2-minute chart, by the way. On the 1-minute chart, there were more candles, obviously twice as many candles in here, pulling back to the EMAs and then break down below. So impulse down on the daily, corrective, impulse continuing here, bearish, impulse down through New York, a little bit of a pullback, after twilight zone volume, taking the break below, and then it was kind of messy here actually for a while, but then eventually hitting 2R. Next example, Dow, bearish daily, breaking the prior day's low, impulse from the open of New York all the way down, big rally back up again, then afternoon again after the twilight zone, breaking down below for trend continuation, impulse down, corrective up, impulse down. See the continuation feel to this? And then again coming down to the lower time frame. This is a 2-minute chart, breaking structure here below 2 EMAs, negative moving average configuration. Next example, Dow, bearish daily, breaking prior day's low. Again, this is the New York session, right? This is Europe. Bearish move down, corrective move up, bearish move down, corrective move up, bearish move down. Where did I take it? Way up here. Here's the correction up, nice zigzag, A, B, C above, taking the break below, boom, and then continuation all the way down for 2R. Hopefully you're beginning to get this feeling here. Bearish daily, impulse down, corrective up, impulse down. Next example, NASDAQ, break of prior day's low, bearish daily, bearish impulse wave down on New York open. This is New York open, driving down, slowly building its way up and through the twilight zone. This is the lunch hour. I typically don't trade during the twilight zone. Break down below here, and then taking the break here, break of structure on the 2-minute chart, continuing down. Now some might say this looks like a zone reversal, right? Because there's a zone marker here, break below. Well, sort of, but not really. This isn't a zone until I put that marker there. This is actually just an open day. If you remove that marker, it's just a continuation, right? Impulse down, corrective up, impulse down. I put that marker there because this is an impending zone at the time, right? This doesn't go anywhere. Back here like yesterday or the day before or a week ago. It's just an intraday pivot that formed eventually. Next example, S&P, bearish daily, right? Blue color candle breaking below yesterday's low. Very sloppy kind of sideways grinding European session. But you will notice here that I shorted quite early in the day. So there was one 30-minute candle on the New York open. I waited for a pullback and then a break below. This can be seen as a zone break or trend continuation. It's got a feeling of both. So I wanted to include it here. Remember I mentioned that sometimes the trend continuation will have characteristics or elements of a zone break or a zone reversal. That's what you're seeing right here. This is also a clean break and close into a fresh range or fresh zone. Pull back and then break down below. Zone break, but it's also a trend continuation. Daily chart breaking the low, and then a little pullback here and break below 1-minute chart. Nice 2R win. NASDAQ. This is a bullish to neutral daily, and I say it's bullish trend overall on the daily. This goes back to October 11th. The daily is an inside candle, so it's a little bit neutral. But you will notice this one is a trend continuation very much in the lower time frame. Certainly we have the strong bearish 30-minute context here, right? A down candle that closed in a bearish position and below the bodies of the prior many candles, a little bit of a pullback and then break down. Where's that pullback? It's right here on the 1-minute chart. You see that? So impulse down, corrective up to the 9 EMA, break down below for a continuation of that move. We don't always need to have this daily trend agreeing with what we're doing here. We're day trading here, right? It helps, or it's nice to have everything aligned at all times, but a neutral candle on the daily can still give us a nice bearish candle here on the 30-minute for context. Impulse down, corrective up, and impulse down. Dow example, bearish daily color, right? Ranging market here in the New York session. Breakdown below. This one again is a zone break trend continuation. It is a continuation of this bearish momentum on the daily. We had a resting candle the day before, kind of a doji style candle. Not much going on there after a nice strong break actually prior to that. And then we kind of closed where we opened. So what was going to happen the next day? Well, it's a bearish day. And then we have this zone break, pullback, break below, but it's a continuation of this momentum feel. Next example, Dow, again, bearish daily the prior day, bearish color here on the daily, meaning the body is blue, ranging all through Europe up until the open of New York, and then driving down, breaking through a zone, but then sharply pulling back. This is that pullback that you see here on the 1 minute chart, and then failing here and taking the impulse wave down, or the impending impulse wave down. So impulse down, corrective up inside of this 30-minute candle to continue the momentum down. Another Dow example, bearish daily, broken yesterday's low by far, driving down here. Just getting this real bearish feeling here in the New York session. This is after the twilight zone. We got a twilight zone pullback here, and then taking the resurgence of volume when the participants come back after lunch, driving down. A little bit late entry here, nothing wrong with that though. Had to sit through a bit of a pullback, kind of a zigzag, and then a fail. I could often take this trade actually right here on the break below here. So you can see in one way I was early, another way I was late, because it could have been taken here. Different ways to look at this, guys, in terms of timing, right? And then driving down for 2R, bearish daily, bearish 30-minute, bearish 1 minute chart, got the pullback, and then driving down. Another example here of a zone break trend continuation, driving down, first candle of New York, bottom wick closed into a fresh zone, pullback, and then flipped over. There's that drive down. Nice, orderly, clean pullback. First of all, a clean drive down, clean pullback. Whenever you see these clean moves, I start to think trend continuation. Rejection wicks here, looking like we want to round over and drive, and sure enough, took the entry here for a nice 2R win. Now here's an example of a bullish daily, breaking a prior day's high, impulse move up, this consistent trend up all the way through Asia, all the way through Europe, and then even into the open on New York, just driving up. You can see that there was buying across the board. And I remember the three sisters, I believe, were all telling us the same thing. And again, that's important to monitor through all of these trades. I'm not actually referring to the three sisters charts here on each of these trades, but I want you to think about what might have been happening at the time in those as well to confirm these trend continuation trades. So momentum is very much up here. Nice, strong, bullish daily. Nice zigzag a correction here, retracement here on the 2 minute chart, pullback, an attempt to rally, another pullback, failure to reach new low, feeling this momentum coming in back here above the 2 EMAs, and then driving higher. Another Dow example here, bullish daily, breaking the prior day's high. Pullback here in the during the twilight zone. You can see 12 noon there, right? This is the twilight zone. Nice, strong pullback here, waiting for an attempted rally, failed, little 2B reversal here, and then breaking above and taking this thing. Had a little bit of pain here for a while, but then drove through after this afternoon volume came back into this market. Bearish daily on this one, breaking many days lows here on the daily, impulse down through Europe, correcting up in the pre-market to New York, and then driving down on the open of New York. Here's an example of me taking a trade a little bit earlier. This is the 1 minute chart. Took this one at 9:34. It's rare that I trade in the first 10 minutes of the day unless I see something very compelling. This was feeling very compelling to me. The big drive down, clean corrective up in the pre-market, and then failing to continue higher here on the 30-minute. Right, failing to continue higher, breaking down, a resting candle, taking the break below. Boom, 2R. Bearish daily again, guys, driving down. Messy New York here for the Dow, but look at this. When you break into the 1 minute chart, clean action coming up through here, clean action back down again. So whenever I see these clean moves, like I mentioned, start to see a breakdown, seeing the bearish momentum on the daily, I'm willing to flip the coin on this. This is 10:20 in the morning. It's still during that first hour where volume is pretty intense. Hit 1R, pull back to break even, and then drop down to 2R quite easily. And again, very clean move on this on the lower time frame. Not so clean here on the higher time frame. Bearish daily, breaking the prior day's low, messy on the 30-minute chart, but nice clean pullback, breaking down below, failing to reach a new high. So failing to reach a new high here, failing to reach a new high here, breaking below both EMAs. Boom. Trend continuation, right? Impulse down, messy, impulse up, down, continuing this trend that we see here on the daily chart. Very bearish prior day breakdown below here. This is another example of taking a fairly early trade. It was 9:40 actually, almost exactly the 10-minute mark that I typically wait for here, but driving down, zigging zag here, a little bit messy actually. I remember watching the Three Sisters on this and getting a clue from there as well, but when we couldn't break above immediately, I took this one here, kind of an aggressive entry, I will have to admit that, and got lucky on this one, and it just drove down, but really leveraging off of what I saw here on the daily chart and this move coming into the New York Open. Again, bearish momentum on the daily, below 2 EMAs here, driving up into a zone and then beginning to round over. So driving up into the zone here on the 1-minute chart, rounding over, taking this thing on the break below this pivot that you see here, really anticipating a continued fail here on this bearish momentum, and of course that worked out very well for a nice 2-hour win. Again, more examples here, guys. Kind of messy here on the 30-minute chart, like a barcode almost, but this clean pullback, and then this big shift candle on the 1-minute chart, a little bit of a resting candle here, and then taking the break of the low below the 2 EMAs for this continuation down. So bullish candle here on the daily chart, guys, rallying into the New York Open, dropping down, and then driving back up again, dropping back down again. And this drop down is what you see here on the 1-minute chart. Failure to reach a new high, but then failure to reach a new low. Break above, boom, 2-hour winner. Very bearish momentum coming into the New York Open. See this here, driving into New York Open, rallying strongly, but still very much bearish momentum. I took the immediate break below that shift candle here, below both EMAs for continuation down, fairly aggressive entry, and got a little hairy for a while, but then eventually drove down and continued that bearish momentum, having tapped into a key zone here on the daily chart. Now here's quite a bearish picture on the daily, right? Longer term bearish move, corrective, impulse down, corrective, rounding over, and then down. This is the daily, right? So breaking the prior several days lows here, coming into the New York Open, driving down, correcting up, right? There's a correction up, taking the immediate sign of weakness here, very much early on in the session here, about 9:46, 9:47 a.m., and then having a little bit of pain here, and then continuing all the way down. Now, I don't want to get into too much detail. You can kind of get the idea. Daily, guys, impulse, corrective, and then impulse, bearish down, taking the momentum, right? Bearish, corrective, bearish. This is again, a zone break type feel to it as well, but just continuing here after just one resting candle, as you can see, really getting a sense here that this market is selling off on this particular day. This goes back to September 5th. I remember that all Three Sisters were doing the same thing. This goes back to August, guys, a bullish daily, bullish first candle on the open of New York, impulse, sideways consolidation, buying the break of the high, and then continuing higher. This is a very simple example of bearish momentum coming into New York, getting a wick up, and so that's the wick up there, and then driving down and taking that continuation move. Bearish flip on the daily, dropping below. This is a zone break and a trend continuation, breaking zones, and then taking the break of structure here on the 1-minute chart below 2 EMAs. A little bit of pain, and then driving down to the 2R. Here's an example of what looks like a rather late entry on the 3-minute chart here on the right-hand side. But what you can see here on the 15-minute chart is a break and close, so a zone break feel, a nice bottom wick, a pullback, and then a break below the prior candle. I don't mind doing that sometimes. So this piece you see here before I got in is just from the top of that wick down to the entry below the prior candle. So the prior candle would have been seen over here. You just can't see it here. Driving down, a little bit of pain, and then continuing the momentum. This is the pain that I'm referring to, and then continuing down. Here's a bearish engulfing candle in the prior day, which portends lower prices from there. Rallying up through Europe, getting some real wild wiki action happening here on the open for the first 90 minutes or so, and then a breakdown into a reasonably clean traffic zone, pull back and break below. This is a zone break, trend continuation, break below this wick, taking it down, and had a nice result on this trade, of course. Here's a NASDAQ trade, very bearish on the day, coming into New York, then again continuing down sharply. Waited for this pullback and then break down below. Here's the pullback on the 1 minute chart. A little bit of a sell-off here, and eventually getting in a little bit later than I sometimes do, but still worked out extremely well here, as you can tell. Just a small pullback and then driving down hard. This is very much about feeling the momentum of the day, having tapped into a resistance area here on the daily, expecting this to reject, which it eventually did, of course. Another example, guys, breaking down below here, very bearish daily, breakdown below of this consolidation period on the 30-minute. And right here can be seen on the 3-minute chart, right? Trying to rally, pull back, trying to rally, failing, and then breaking down below for trend continuation. All right, guys, I'm going to speed this up a little bit here. Bearish daily continuing here, a little bit of a resting candle here, and then driving down. This is the beginning of New York, this bearish drive down corrective, right? So here's that rest and then breaking down below, trend continuation. This is a bullish daily picture. It became a bullish picture going into New York, breaking through zones, breaking through ranges. A little bit of a rest here. This was messy, but it still worked out. Took this kind of break of the bodies here. A really, really messy trade, agonizing trade. Typical manic Monday price action was my note, but it still worked out. Really working on the momentum there. This is a bullish daily, huge candle, gladiator candle, a little bit of a pullback, just playing the momentum here, trend continuation. As you can see here, pull back, pull back, pull back. These are 3-minute candles, by the way. So this is a long time here for all these blue candles. You got one white candle, pull back down below, and then I just took the momentum up. That trade, by the way, goes back to July 18th, before I started measuring my trades differently. But again, you still get the feel here, guys. This is something I've been doing for many, many years in different formats. Bullish daily, very bullish daily here. This goes back to July 19th. Break above into a zone. Big impulse wave up, corrective wave down, took the resumption of the rally right here into a nice win. This goes back to July 20th. Bullish daily, bullish 30 minutes, impulse, corrective, impulse for the win. But I do want to remind you that sometimes these setups don't work, or they don't work as well as we would like them to. Here's some examples. Here's a corrective wave up. I'm expecting it to continue down. I hit 1R, but then prices reject and take me out at the original stop. Impulse down, a little bit of a rest. I'm expecting this momentum to continue. It does. It actually hits 1.5R, but then eventually rejects. Here's a very bearish prior day and a break of that day early on, so I'm expecting momentum to continue. I wait for this really nice orderly pullback. I hit that short. I get all the way to 1.5R, so not bad at all, but eventually it rejects and goes back to the original stop. How about this one? Very bullish daily, breaking several days highs. Bullish move into the open. Nice orderly pullback. I take the first sign of strength and it fails immediately. How about this one? Here's an orderly sell-off going into the pre-New York. A rally into the New York Open, failed to make a new high. I'm expecting prices to go significantly lower. Enter a short here, hit 1R, and then immediately reject. Bullish daily, breaking the prior day's high. I'm expecting prices to go even higher. Waited for this impulse, corrective resting move here, 9:55. We're still quite early in the session. Buy the first break above. Hit 1.5R and then immediately driving down. Very bearish daily candle, breaking several days lows. Impulse wave down, corrective up. I'm expecting prices to continue down. They do. Hit 1.5R, not bad. And then eventually, I believe this actually went back to my original stop. Very strong impulse down in the first hour of New York, pulling back in a fairly orderly way, and then beginning to fail just above the EMAs, taking the salad, hit 1R, but then immediately reject it. They don't always work out, guys. Bearish impulse going into New York, rejecting back up. There's the rejection back up. I'm expecting prices to continue down. Take the short here, right below this candle and below both EMAs, expecting prices to go lower. Rejects immediately and takes me out for a 1R loss. So as you can see, guys, trend continuation trades can be a very effective way to extract profits from the markets outside of just zone breaks and zone reversals. But it is very important to remember the key characteristics that we discussed at the very beginning. The trend continuation trades occur during an existing trend on any time frame. You'll notice that I was sometimes keying off the daily chart, sometimes off the 30-minute chart, and occasionally almost exclusively off the lower time frames, the 1, 2, or 3-minute charts. The entries are often after a pullback or a retracement in an existing trend. The setups may contain elements of zone breaks and zone reversals, so you can begin to combine these things in your own mind and make them your own. The T-con setups are certainly more advanced than zone breaks and zone reversals because they do require some discretion and artistry, and for that reason are best suited to experienced price action traders or those who are testing things out and experimenting using a demo account. I do recommend mastering zone breaks and zone reversals first, but of course it's completely up to you how you approach this. Thank you for being with me here today, guys. I do appreciate you and your ongoing support. And I hope that this discussion helps you to understand trend continuation trades in a little more detail. Thanks for being here. Have an amazing week, and we'll talk soon.